We have a quiet day today. No red flag news. We have some news coming out tomorrow from the pound, but that's, again, that might have an impact on the DXY. It's just it's not a big thing. Wednesday will be the big core CPI, monthly and yearly data. Now, the Fed has made it very clear that the next rate hike or rate hike decision will be data driven. So at the moment, they're making decisions based on the data that they're receiving month by month. The past 2 months were good. However, the market is expecting another increase in September. The next Fed meeting is on the 20th. So again, we might see volatility around Wednesday before New York starts. We are used to it by now. It's good to know what's going to happen. It's still going to be within the charts and the patterns and the spaces that we have mapped. You have probably noticed by now that there are very few times, I've only noticed, how can I say, maybe twice a year when price action moves incredibly up or down in terms of percentages outside of the predicted measured targets. The most recent drop has been one of these. However, it doesn't happen very often. That's why I choose to take every news as how can I say, a time reference rather than an analysis reference. They're not by any means going to influence my analysis. However, they might influence the time when I place an order. If I don't have my order in by the time the news hits the charts, I will wait at least half an hour after the news hits the charts to place that order. Thursday is again a very busy news day because we have the unemployment claims, the PPI, and the retail sales. Again, we are starting the setup towards the Fed meeting. And Friday, we have the Empire State Manufacturing Index and the preliminary consumer sentiment. So that's going to be times of volatility in the intraday trading. So if you're trading the 15-minute, you need to be watching every 15-minute candle for a possible top out formation. Don't let your trades unsupervised while this news is happening. If you're trading the 4-hour, I'm trading the 4-hour, I'm making sure I have my stop losses in, because in times like these, anything can happen. The market can move wildly. I have my stop losses in, and then I have my long-term targets in place. I will show you what I mean directly on my ETH trade. Now, let's have a look at CoinGlass as well to see where the liquidity is today. The current market since mid-August has been ranging, and it's been ranging because of this. You see how liquidity has pulled between these two sides. So 1538, 1626, between these ranges. That's on the 1 day for Binance. Then we have on the 7 day, we have some space opening around the 1444, 1470, and then around 1691 as well on the increasing end. Right now we're right here in the middle. You can see that there is increasing liquidity to the upside, but there's also continuous, constant, steady flow of liquidations to the downside. Now there's enough money to both sides. We need to see, I know I've been saying this for the past 3 weeks, we need to see the range being broken to either side to be confirming a direction. It's normal to have more liquidity now to the upside because price action has been coming down and it's been hitting retracement levels. And while retracement levels are hit, people are placing also long positions on those retracement levels. People, retail, market makers. So those retracement levels are places of interest. Let's have a look at the S&P. There's a weird bug in my trading view. The S&P turns into ETH. The DXY turns into ETH every time I check the charts on my computer. I think it has to do with my phone. Now the S&P is holding the 20 on the daily. The 20 on the daily is the one that I watch for trends. However, I'm taking this with a pinch of salt because the 20 on the daily has been held since this time. So it's the 15th of June, the start of summer. We've had a little bit of a peak up. We've had a little bit of a peak down, and we've been holding this range. It's a lot less volatile than what ETH and BTC have seen, but it is in the same space. As you can see, it did a close to 786 retracement of the previous peak, then came down, found support on the 382, and now it's meeting the 0.5. The 0.5 and the golden pocket are important levels if it manages to get through that. Now the stock is down, and we've had a lot of bearish divergences on the daily. You can see we've had 1, 2, 3, 4 peaks outside of the regular range, and no reset to the downside. Could we still continue? Yes, we could, like we did here. Absolutely, we could. What we would need to see in order to leave this sideways is the previous peak being broken. As I've put this path to the upside, we need to see the previous peak being broken, a 414, a 1614 retracement from the previous peak and the previous drop, and then a back test, and this peak needs to be turned into support, because this is actually a very important support and resistance line for the market. So if we move on, back test, continue, happy days, we are in a very nice bull run, in my opinion. Until that happens, I'm going to read what I see, and what I see right now is the sideways. And again, the sideways will break if we start making our way downwards. So I've talked about the upwards for the S&P, and the downwards would be, at the moment we haven't even done a 236 correction. When we get to the 382 and 0.5, that's where we could stop, consolidate, because you can see this here would be a daily support and resistance level, the 0.5 correction level here, but somewhere between the 0.5 and the 382. So these two would be levels that I would be watching for the S&P, and the reason being is that the coins will follow what the S&P is doing, not necessarily immediately. There's always, I call this the last draw of blood from the market. Higher risk assets like the coins are the ones to come down later. There's a liquidity run to the upside usually, and then a push down to follow the S&P. The stochastic is down, and the regular RSI on the daily is down as well. Now let me just start this indicator. For some reason the trader's reality indicator is not working. XY. Let me see once I refresh. Okay, now the DXY is holding the support of the 200, the 20, the 50, and we are looking at a golden cross here. Now the golden cross for the DXY is a lift for the DXY and a drop for the S&P and the coins. So we are looking if when the 50 is going to cross over the 200, the way it did so here on the way down, we will have the opposite on the way up. Again, we have we've gone past the previous peak. So if this is the W formation, this is broken. I would like to see this being broken as well, and this could be confirmed as a triple bottom formation. If I am to be more conservative in terms of trend lines, I would say this is the triple bottom support and resistance trend line, and as you can see, we've gone past it. It's and it actually has been back tested here on the daily. The daily stock is up. There are bearish divergences. I'm so sorry. I keep pressing the hashtag rather than the delete. So there are plenty of bearish divergences on the daily. There is still a lot of support. What I would need to see here in order for this to be confirmed to the downside is the breaking of the 200, breaking of the 50 downwards. That's it for the S&P and the DXY. Bottom line is in line with what I'm going to say about the coins. We need to see the range being broken to either side. At the moment, it's getting very tight towards the support, the resistance for the DXY, and the support for the S&P, which is where we are with the coins as well. Now I'm going to move on to ETH because that's my immediate focus. This is the 12-hour chart, and I believe that we are in a daily correction. We are in a daily correction pattern. The stochastic on the daily is still down. It hasn't reached the bottom. And the MACD on the daily. Now the MACD is both the volumes are coming down. The MACD hasn't yet crossed down, but it is below the midline. Being below the midline is generally a downtrend. And we can see here the buying volumes are decreasing, which generally means that something like this will happen. Selling volumes will come in. We are below the 20 EMA on the daily, and I believe that this is the bigger space for correction. My current target is 1330. Now, the reason why I'm saying that is I was hesitating last week as to whether to keep my lower time frame target, which is the 4-hour time frame, and the 4-hour target would be the retracement of this swing, and that would be 1537 for the 786. So that was my short-term 4-hour target, or to have the 1330. And when I look at the daily channel that it's broken out of, 1330 is where the measured target lands, actually a little bit lower at 1307. The golden pocket is 1325, the support, the 065. So I think I'm being quite measured here in approach for holding the target at 1330. Also, I used to be a pattern trader, so I won't give up my patterns because they work. This here is an M formation. I'm taking this as top and this as shoulder. And if I take this and I place it here, it is very much in line with this. Again, the way I say to you to take your 3 yeses for entries, that's how I measure the targets. And there are targets that fail even if there is a lot of confluence. I still look for the confluence between different patterns, different formations, different fib retracement levels to be in agreement. So that's why at the moment I have the 1330 target in. Now let's have a look at the trade setups. We're gonna, again, this is gonna be a quick 5-minute analysis because we will be looking at the same space. I keep tweaking this line between where it is and a little bit lower because we've had multiple touches through it. I generally say 2 touches to it, 2 touches through it. So these 2 would be 2, and we would have multiple truths, but that's the nature of the chart. As you can see here, this was my short entry. It was a 786 on the 4-hour swing here. I have DCA'd when it broke the previous low here, 30% here, 30% here. I have another 30% here. So that's how I am gonna DCA on the way down. Now because I DCA'd, my entry right now is, let me clone this, it's down at 1627, so it's right above here because it went halfway through because I DCA'd with the same amount. The first DCA is the strongest one. And now I will be following it down to the 1330. Again, I would advise, because I will practice it myself, I will be watching to see what it does around the 786 level on the 4-hour. I have the longer time frame target because I'm thinking that it might do a spike like this. If it doesn't, if I see a protracted drawdown and a bottoming out formation on the 4-hour, so if I see something along these lines on the 4-hour, 2-3 days of not going anywhere, I will be taking my profits. Again, 2-3 days is, I'm just saying it right now, but I will be watching it. It might actually be I don't know, maybe 16 hours, 4-hour candles. I can't estimate it precisely because again, we're talking about a 4-hour time frame, so that could be anywhere from 16 hours to 36 and so on. So 1530 is the shorter time frame target, even a little higher 1540, because that would be, again, that would be the consolidation of this sideways channel. I took this, I put it here, and that would be yeah, 1530. So that would be it. Now, if you haven't started a position yet, the pathway for you to follow would be, we've already back tested the previous support, but we could already push down to the golden pocket, back test the 0.5 and then push down here. So that could be a possibility. Now, this might also be what happened last night, might also be the back test. We've already had the 20 coming down over the 50 on the 4-hour, but the space is too small to think of it as a major MA move. Again, when the space is so small, these moves can happen and they might not lead to anything. So that's why I am cautious. My entry being here at the moment, I still have my 0.5% stop loss because I think maybe New York might want to backtest the 50 on the 4-hour and continue downwards. Now, it might be something like this where it just spikes me out. That is the nature of sideways trading. I don't recommend it. If you're trading the smaller time frames, great. If you're trading the bigger time frames, great for observation skills. This is mostly why I'm doing it, because I want to see how the final stages of the bear market actually play out. I want to stay attentive and focused, and I know that a position might help me actually be more invested in it rather than just waiting it out. So that's my main reason. Other than that, the spike can be deadly, and that's why I choose to not risk more than 5% with each of my tries. Okay, now that is the downwards scenario. Again, if I don't see this moving on this 4-hour time frame, I'm going to bring my stop loss to entry, not risk anything, and let it play out. How do we know that we are reversing? This is actually, it gets to a point where, like it is now, it's actually quite simple to be able to tell that, because the MAs are starting to form support and resistance levels. So the 50 here on the 4 hour will be the support and resistance. We need to see it being broken. We need to see it back tested. When it's back tested and it holds, then we need to see it move upwards. Now it has tried to break it once, twice, 3 times. The 4th time is when it generally breaks it, but we still haven't managed to confirm above it yet lately, as in this weekend. Ever since this was Friday. Friday had 2 candles above it. Happy days. Looked like it was going to be great for continuation. It didn't. It turned downwards, made a local lower low. Now this low needs to be broken. So watching the 50 and the 20 MAs or EMAs, because they're quite close, and then the 200 would be the next level. I would be DCAing out at the 200 if I manage to get a nice entry in here with my full capital. I would be DCAing out at the 200 because it hasn't yet backtested the 200 since this major drop happened. So I would say the first time it backtested, it's going to be a rejection. That's what it generally is. But again, DCAing out and then putting it back in if it actually continues to close on the 4 hour above it. Okay, so these are the two possibilities that we have for today. Sorry, for this week, because it's a 4 hour, it's the 4 hour time frame. Let's have a look at BTC. I was posting that BTC on the daily time frame is a little bit odd, because we have, again, for the MACD, we have the lines indicating a lift is possible, but the volumes here are showing that continuation to the downside is more likely. So ambiguous messages. The stock on the daily is down. Finally, it's crossed down. It's looking like it wants to push down. We are below the 20 EMA. We've back tested it twice. We seem to have made a lovely arc here of consolidation, with this being double top, mountain peak, final peak. We're ready to move. Again, we are looking at the same. I'm going to move the same pathway. Okay, onto the 20, there we go, 20 and 200, there we go. And then continuation to the target of this channel. And again, this would be the 4 hour continuation. We haven't yet broken this, so BTC is one step behind ETH in terms of breaking lower lows. Again, if you haven't caught this yesterday or this Thursday. If you haven't caught this Thursday or this yesterday, then the next step for you would be when it confirms that it's going to break down. So there's no point in trying to get a position in the middle of the range. It's either closer to the top of the range on a 4 hour retracement, or when it breaks it. Now, I've started placing breakout trades. They haven't actually been taken so far because I've got the chance to get in on retracements. There have been plenty of retracements in this chop, but a breakout trade below the previous low, this one or this one, and then as a position trade, going in with 15% or 20%, and then putting the stop loss at the 5%. And again, if you go in with only 10% of your position, you might be putting your stop loss at 50%. So from where you enter, another 5% upwards, which would be great to protect you. I will be posting these trade setups in the chats, and on Friday we'll see which entry or which pathway proved out to be the one that coins took. Of course, I will keep you updated during the week. as price action moves out of the range. It's I'm trying to be a bit more quiet as we are in this range, as it's becoming very much like reading tea leaves on the 4-hour, which proves that this is a daily move. So until the daily breaks out of this support and resistance level, even the 4-hour stock and the 4-hour support and resistance, we are above the 20, we're below the 20, we're above the 20. So it's a bit of a, how can I say, yeah, it's just chop, and it's distracting, and it's not really helping us trade better. So watching the range, I am watching the support and resistance along the 50 and the 20, both MAs and EMAs. I'm watching both charts at the same time. So if I see something significant, like a significant move upwards or downwards, I'll let you know in the chat. Do let me know if you have questions. Do let me know if you have different trade setups that you're watching. It's great to exchange ideas and to, you know, to have 4 eyes, 6 eyes, 8 eyes on the same price action and consult. Thank you for today. I will see you on Friday in the morning.